Hello, I'm Neil Whelan and welcome to the Wesleyan Podcast. In this episode, brought to you by Wesleyan Financial Services, Regional Manager Neil Richardson talks to Marie Williams-Cooke about what dentists need to consider about their pension and retirement planning when they move from the NHS over to private practice. In particular, they look at the benefits they'll lose as part of the NHS pension scheme and how to replace them. As always, this podcast is for information only and doesn't constitute financial advice. But if you do need to talk to someone about your finances and retirement planning, I'll be back at the end to tell you how to get in touch with us. But for now, I'll hand you over to Neil. And first up, Marie.
Hi Neil, thank you for taking the time to join us today to talk about a topic which I'm sure comes up regularly when speaking to dentists and discussing their financial plans. So let's start by giving your thoughts on why dentists consider moving from NHS to private and some of the key financial considerations they need to be made aware of when transitioning, in particular the impact on their pension.
Yeah, absolutely. Thank you, Marie. So I think for a long time now, we've seen the transition for dentists from being an NHS dentist to a private dentist as being a very, very aspirational one. It's seen as something to aspire to when you're at the beginning of your career for all kinds of reasons. And I think primarily what dentists identify is the opportunity to have a bit of a better work-life balance, more time for quality patient care, slightly calmer days with less patients, longer appointment times, the time to do the right things by the patient. So there's lots of work-life balance, mental health, job satisfaction benefits that are really, really important. What we tend to see, though, is that lots of dentists make that jump because it is an aspirational jump without really thinking about what are the wider things I need to think about. So the first one of those that we always need to consider is okay, if I've just been an NHS dentist, what are all the things that I might lose from no longer being an NHS dentist and having the kind of combined benefit package that comes with that status? So the big one that everybody always thinks about is the NHS pension. And I think there's a little bit of uncertainty and maybe kind of financial myth, about the risk of the NHS pension that you've already built up being potentially lost, or also potentially being completely frozen in time. And it's important to say that that isn't the case. So one of the great things about the NHS pension scheme is that whatever you've built for the time that you've been building benefits in it, it will always be there for you. So it will always be something that will support you in retirement. There is effectively one important change when you no longer complete NHS dentistry, which is you change from being an active member to a deferred member. And if we put that into the simplest terms possible without getting unduly complex, all that basically means is that you get a slightly slower rate of inflation linking on your benefits that are preserved for you than someone who's actively completing NHS dentistry and therefore actively contributing to the scheme. So there is an impact on NHS pension, but it's not as big as always is feared. So absolutely no loss, no freezing effect. However, what that does mean, though, is obviously, whilst that's still there and it's still building in the background, it's not building in the way that it was. So you do immediately have to think about what else am I going to do now from my private dentistry income to build some form of provision for my retirement. And that obviously means financial planning is needed and conversations and careful planning is needed as well. So typically, what I would say in that scenario is it'd be really sensible to sit down with a specialist financial advisor who really understands dentists and say, if I was thinking of doing this and making this big change from NHS to fully private, what kind of pension would I expect at retirement now? And what kind of pension, now without making any changes? And what kind of pension would I get in retirement if I am to suddenly cease NHS work and only work privately? And let them show you the difference between what you can expect to have compared to what you will have once you make the change. That's going to be a really powerful part of understanding the impact for you. And it will help you to put some really specific planning in place around the kind of retirement you'd like to have and the kind of things you'd like to do in retirement, how much that might actually cost you and how affordable that's going to be from the provision that you already have. So that will be a really, really big thing for them.
So then if a dentist wants to keep some of their NHS work whilst as well doing some private work and have that mixed model, how does that affect their pension and contributions going forward?
So it's really, really common. It's increasingly common to do this. And if you look at places like Scotland and Northern Ireland, it's exceptionally common to find mixed practice dentists. So yeah, it happens all the time. In terms of pension contributions, if we think about somebody, and let's just pick some random example numbers out of the air and say, and we compare them from being 100% NHS dentist to suddenly being, let's say, a 50-50 NHS private dentist. Ultimately, they'll still keep that active NHS pension member status that we've talked about already. They'll still be actively building benefits in the scheme, but basically they're just building half as much. So in terms of their NHS pension provision, they're effectively half their rate of increase. That's the simplest way to look at it. So we go back to that conversation about measuring where you'd like to be in future and understanding what your gap may now be. Now you've lessened your NHS input and your NHS pension building. And that's where you start to say, okay, we need to now quite carefully understand what you need to add into some other form of retirement planning to build the rest of your retirement plan for the future. So that's a really, really big thing. Part of that really does need some careful consideration because there is the complexity now of the annual allowance for pensions, and measuring your NHS input for the annual allowance is not a simple thing. It's not necessarily something anybody can just pick up and do. It's quite a complex formula. You need to know what numbers from your NHS pension statement to use, and typically people need specialist advice to understand that and to understand how to work that out. So you do have to also be careful about not just going, I now know I need to fund some kind of private pension arrangement and just throwing any amount of money into it, because what you don't want to do is suddenly find that you're breaching the annual allowance to pension input and causing yourself excessive taxation as an impact. So it does need some really, really careful planning. So if we think about mixed practice and pension contributions, it's basically it's imperative that you take advice. If we then kind of think slightly wider, and we've not really talked about the NHS basket of benefits outside of the pension scheme yet, but there's some other quite key things that you will lose as well. So the first one, if you were to effectively lessen your NHS dentistry, is you definitely going to have an impact on the NHS sick pay that you're provided with when you are unable to practice for more than 4 weeks. So again, if we use the same scenario, if you were previously 100% performing NHS dentistry, and again, we don't try to overly complicate it by getting into the nub of technical detail, and we say you now complete 50% of that dentistry, pretty much broadly we can say that you're going to get half as much sick pay. So that means you need to think about what's going to happen and what's going to be manageable for you financially if you can't work. But there's a wider package of benefits beyond that that will all also be impacted. So there is the ill health retirement pension scheme that's there to protect those dentists that have some form of shorter absence from work that unfortunately becomes long-term and permanent. There is obviously dependents benefits, so death in service benefits, spouses benefits, dependent children's benefits that are all built into the NHS pension scheme. They're really important things, and they're important things because whether you are aware of it or not, typically when you get financial advice, the financial advisor that's working for you is building an assumption of some of those things into your financial plan and assuming that they're going to be part of the protection package that's there for you and your family. So if suddenly you're doing less NHS dentistry, it's going to be hugely important to kind of raise the flag with your normal financial advisor and say, this has changed. And if you've built these things into my financial planning, I absolutely now need you to understand the gaps for me and make sure I know what I need to change. And again, that's a really important reason why we say deal with a specialist, because all those things come with bits of complex calculation that make it really hard to do for yourself.
Yeah, that's really interesting. There's a lot to consider for sure. So if they decide to go fully private, what alternative pension options are available to them?
So there's quite a range of pension options, and if we look at what's currently kind of the hot thing that we hear a lot from dentists talked about to us, and also I know from talking to them that friends and colleagues in the world of specialist dental accountancy get asked a lot about this as well. It would be SIPs, and SIP seems to be a buzzword. So what a SIP is it's effectively a vehicle that allows a dentist to have some slightly wider investment choices than a normal pension plan. And they were really popular 15 to 20 years ago because you had lots of dentists who own their own practice buildings with the sudden ability to actually put all or part of their practice building into their pension plan and have some quite beneficial tax relief on that. The decrease in the annual allowance over the last 20 years has made that increasingly difficult. And for that reason, we saw lots and lots of providers withdraw from the SIP market. It was also a hugely complex thing for pension providers to administer. So for that reason, we do tend to see less and less dentists have their practice building as part of their pension plan using a SIP. And there's all kinds of issues with flexibility about how you plan in future and how you're committed to fund your pension because of the obligation to pay a rental for using your now pension plan's practice building that isn't actually your pension, your practice building anymore, a rental and a market rental at that for the fact that your business is using the building, that mean you accumulate capital value very, very quickly in a SIP, generally speaking. So there is pros and cons to it. It's something you have to be really careful about. Why I think SIPs are a buzzword right now is we see a lot of the online platforms, the AJ Bells and the people like that promoting them as a pension vehicle. And when SIPs first came about, they had two broad advantages compared to other kinds of pension plan, which was the property aspect, but then also the aspect of being able to invest in individual stocks and shares. The strange thing being is that the kind of sudden surge in popularity and the extra flexibility that SIPs offer typically don't line up that commonly with where dentists want to actually plan and the level of risk that they actually like to take. So typically they are riskier things that we don't find many dentists have a comfort factor for when they're talking about building retirement planning. So typically that would mean most dentists retirement planning needs would be perfectly well met by just a standard generic personal pension plan. So there you've got your two broad options at the moment. One with some greater complexity, one that is more kind of everyday, simplistic, kind of easy to understand and easy to administer. Horses for courses with these things. For some people, one will be the better option. For others, it won't be. So it's something that's really important to get advice upon. A common thing that we do talk to dentists about a lot, and this is particularly more common with dentists who are operating privately, is the ability for their limited companies, typically private dentists, if they've had good specialist dental accountancy advice, will tend to be trading through a limited company. And it's that ability for the company to fund pensions extremely tax efficiently for them, and also potentially for partners that may be drawing an income from the business as well. So there is lots and lots of tax efficiency around private planning, depending on how you structure yourself for tax purposes.
Okay, so talking a little bit more about the tax implications, it'd be good to understand what pension-related tax allowances dentists need to watch out for.
Yeah, absolutely. So from a tax perspective, we've already touched a little bit on the annual allowance, and I think the most important message around that is whether you are, well, for anyone who's mixed, who's still got that NHS contribution going on, effectively is getting that really, really specialist advice and understanding that says from your NHS contributions, this is the amount of annual allowance that you're actually using of your 60,000 that you're permitted to have each year. I don't want to go into the complexity of this on a podcast because I could probably spend an hour doing so, Marie, and it would potentially come across as extremely dry and difficult to actually understand because of the level of complexity. But broadly speaking, you can carry forward from previous tax years up to 3 previous tax years, and that can mean you can put more than the £60,000 in a particular tax year, as long as you've got earnings greater than £60,000 in that particular tax year. So you can tell from what I'm talking about, when you've got that mixed NHS private work going on, there needs to be some pretty careful measuring. For a fully private dentist, it is much simpler, much simpler, because literally what you are contributing to a pension is literally just what you're paying in as contributions. So much simpler. The other thing around tax allowances that I think dentists need to be really wary of, and this is when we come on to starting to talk about how someone's structured for tax purposes and what might be the most advantageous for them. And obviously we have that conversation and then hand them off to an appropriate specialist dental accountant who actually goes, right, let's pull this apart for you and look at the facts and figures and give you some concrete advice. But when we have that conversation, it's this kind of the £100,000 mark where people start to pay an effective 60% tax band. And it's because there is this long-held government tax policy of starting to take away everybody's tax-free allowance that they get to earn each year before they pay any income tax once they earn over £100,000. And broadly, that means between £100,000 and £125,000, to make it really simple for people to follow, is you are paying this 60% tax band as they take away your tax-free allowance and set it back to zero. So the other thing I would be really keen to talk about dentists too around tax planning and tax allowances is that ability. If you've got a taxable profit somewhere in that probably 150,000 down to 100,000 area, to actually save yourself a considerable amount of tax by using effective pension planning, it's a really powerful thing, both in terms of dropping your tax bill and also building your wealth for the future and giving you some diversification once you've taken that step away from the NHS pension scheme.
Okay, thanks, Neil. I think you've made something that's really complex, quite easy to follow in all of that. So that's really great. Lastly, just to finish off, what would be your 3 tips for any dentist who's considering the transition to private work?
Okay, thank you, Marie. Yeah, so let's keep this really simple and high level. So number 1 is to say, I would love it if dentists came and got advice before they made the change, because so often we're having the conversation after somebody's made the change. So number 1 is really simply come to us first, ensure you understand the full ramifications of things like how your sick pay is going to change, what it does to your potential pension benefits, and then knock onto that on your ill health retirement pension. Also, how it might impact the death in service benefits and the spouse and dependents death benefits that sit within the whole NHS basket of benefits. And the reason for that is really simple, as I've indicated too. Even if they've not been explicit about it, your financial advisor has probably thought and included these things within the planning that they've created for you. And if you're suddenly going to change that balance and lessen those things, you absolutely must put your hand up and say, tell me what impact this has before I do something about it. There are unfortunately some really sad examples in the last few years of dentists who've gone from NHS to private without raising that flag. And unfortunately, their families have not been left in the position that they would have expected to be in because these areas just weren't addressed. So that would be number 1. Number 2 would be make sure you understand how your NHS pension accumulation will change and try and get that forecast of, and again, this is in advance. So where am I going to be if I stay NHS and I retire as a fully NHS dentist? And what does that then cost me in pension benefits if I go to 50%, 30%, or completely leave the NHS pension scheme and go, I am now a fully private dentist? Get that forecast, get those projections and understand them. And then you can see the difference between what you are actually giving away by making that change. And I'm not saying for any point or purpose that you can't fill that gap. I'm just saying, understand the gap. Yeah. So number 3, I talk a lot about obviously getting specialist dental financial advice. You must also make sure you go and get specialist dental accountancy and legal advice. So from an accountancy perspective, about change and whether that means you should be changing how you structure yourself for tax purposes. But from a legal perspective, any changes that you therefore should be making to partnership or associate agreements that you might have because of the fact that you're changing the nature of the work that you do. It's absolutely imperative that you pick up those things and that you are properly structured for tax in the most beneficial way that you can be, and that you have all the right, correct legal documents that protect you and set clear definitions as to what's expected from you in your role as a dentist, whether that be as an owner or as an associate.
Brilliant, thank you. Great tips there. Well, thank you for joining us today, and we'll see you very soon.
My pleasure. Thank you, Marie.
And that's our show for this week. Thank you to Marie and Neil. If you are looking for expert financial advice, go to wesleyan.co.uk, where you can book an appointment with one of our specialist financial advisors. Charges may apply, but we won't charge you until you've agreed the services you require and the associated costs. Find out more at wesleyan.co.uk/charges. To learn about Wesleyan more generally, you can find us on the website formerly known as Twitter, as well as over on Facebook, Instagram, and LinkedIn. And if you found this podcast useful, you can like and subscribe to us on all the usual platforms, as well as find us on YouTube, where there's a whole library of videos covering a wide range of financial planning topics. That's it for now. So until next time, thanks for listening.